It's been a pretty brutal week for BMNR investors. It's been a brutal week if you're just investing in anything, quite frankly, because most of the market is down this week. BMNR is hit especially hard. Crypto is hit especially hard during these drawdowns. But there's also something that's going on beneath the surface with regards to the actual company and the ecosystem. So, in this video, I'm going to be talking about the sentiment and the drawdown, but I'm also going to be talking about the adoption and the accumulation of Ethereum in the ecosystem in general. And more importantly, I'm going to be covering BitMine's earnings, which was just reported on Friday, and some major news that they dropped on earnings. It's going to be a big video, a full weekly recap. Let's jump right in. I made a Twitter post where I asked if you guys wanted this video, and the overwhelming response was positive. So I'm making a weekly recap this week, especially because we had earnings, and that's going to be some pretty big news for BMNR investors or community members, as I should say, myself included, by the way. And you know how these videos go. So if you do enjoy these videos, even though they're a little bit longer than my usual content, please like, subscribe, and share this video out. I think it's going to be very helpful for other investors. Let's start off with the stock price for BitMine immersion. We can see the stock price here over the past week is down about 20%, and over the past month is down 47%. So obviously not a great look for BitMine in general. Now, I have been buying more. Said here, I'm not even bothering doing cash secured puts at this point. I'm straight up just buying more Nebius, and I'm buying more BitMine. And I did cut a little bit of my Tesla for it. And we'll see how that goes, if it's a good trade or a bad trade. This is the overall recap. I wanted to start off with this first and foremost. It's one of the fastest moving crypto bear markets ever. On October 6th, crypto hit a record 4.27 trillion in market cap. This is the peak essentially. And in the 45 days that followed, it's down 1.3 trillion. Today, the total market cap for crypto is below $3 trillion. It seems to be stabilizing a little bit, but it's still quite severely down. Now, a lot of these posts are going to be in chronological order, so bear that in mind. This was from last Monday. Tom Lee still thinks that we're in a correction, and he mentioned that he thinks Ethereum is going to bottom this week.
That's the fundamental story. The price, of course, for Ethereum will fluctuate because crypto is hyper volatile. In fact, it's kind of it's sort of a feature of the blockchain itself. And I think we've been in a downtrend, unfortunately. A lot of folks are kind of questioning if we're in a 4-year cycle for Bitcoin. So we talk about that in the chairman's message we published this morning, that the most correlated factor to Bitcoin prices when you see it at Bitcoin at a peak actually is the ISM. So I think we're still in a correction phase of crypto. Crypto suffering from that liquidation event on October 10th, but because the fundamental story is intact and we crypto discounts the future, that's why it's volatile, but it still looks pretty attractive here.
So let's move on. Here you had another clip from Monday with people agreeing with Tom Lee, saying we're near a bottom. Here you have BMNR Bulls reporting record-breaking crypto ETF inflows, 100 plus new ETFs launching, thematic and index products exploding, stablecoins booming, tokenization, digital ID going massive. Let's play this clip really quickly from CNBC on Monday.
You agreed. You said that you agree with Tom that it's nearing a bottom. How much of a long-term buy do you think this is?
I think it's a generational opportunity for long-term investors, whether you're looking at Bitcoin, Ethereum, or Solana. To double down on what Tom said about Ethereum specifically, look, I think investors are very nervous broadly about the economy, about AI valuations, about tariffs, about the broad economy. You want to look for secular trends that are decoupled from that. I think regardless of what happens on the economy in the next year, stable coins will grow tremendously. I think regardless of what happens, tokenization will, maybe 10x in the next few years. Prediction markets are going to be huge. Decentralized identity and digital identity are going to be huge. Ethereum lets you play those secular trends, which are in this enormous growth phase, almost regardless of what's happening in the broader economy. So for me, it's really it's a generational opportunity. And to get in at these prices, I think really is almost a gift for long-term investors. It's a tremendous opportunity.
Of course, this gentleman is the chief investment officer at Bitwise, not to be confused with BitMine. He is the chief investment officer at Bitwise Asset Management, one of the world's leading experts on crypto, ETFs, and financial technology in general. So to see subject matter experts in the space agreeing with Tom Lee around the potential for crypto, I think is very bullish, to say the least. Here's another clip. This is from Wednesday. Tom Lee said the weakness looks just like October the 6th. Of course, he attributes a lot of this pullback to the volatility that was seen in the October 6th liquidation event. Let's give it a listen really quickly.
I kind of concur. I think crypto, Bitcoin and Ethereum are in some ways a leading indicator for equities. because of that unwind and now this sort of limping and weakened liquidity.
All right, take us back. So October 6th, Bitcoin hit 125,000. Yeah, a couple days later, it was still around 120,000. Now, obviously, Bitcoin's at 86 and change. So what specifically occurred on or around October 10th that would lead us to where we are now on what, November 20th?
Well, Steve actually pointed this out. There's a lot of what they call automated processes in crypto. One of them is called ADL, okay, and that's an automatic liquidation feature that would take place if someone's account or their collateral drops in price. It's essentially like a margin call. On a specific exchange, a stablecoin's price varied from other exchanges. It actually, stablecoin should stay at $1. It dropped to 65 cents. But that only happened within the exchange quotes, within this exchange because of liquidity. That triggered an ADL, an automatic liquidation across many accounts. It wiped out as that spread across other exchanges, right? Because liquidations cascade. Almost 2 million crypto accounts got wiped out, even though minutes before they were actually profitable accounts.
So who is behind this? Like, who's the they in the market makers and they got hit? Who's the they?
I am aware of names, but because I'm not someone who wants to name names, I think what you should keep in mind is that this error is actually essentially a bug, a code error, because I think in retrospect, they would have pulled pricing from across exchanges to set the price for that stablecoin rather than rely on internal quotes. This has resulted in a lot of market makers and traders having less capital. And as you know, as crypto prices drift lower because trading volumes drop, they need to then have more capital available, which means they shrink their balance sheet further. So this is then that reflexive weakening.
So that's really interesting, right? He mentioned that it's essentially this bug in the system that caused this massive drawdown in the liquidations across the board. And he knows the names of the market makers that did take a huge hit. And so it's really interesting to see the behind the scenes of what's going on with regards to that unwind. And all of it boils down in large part to liquidity. And obviously, it seems as though it's something somewhat systemic, that it's just collapsing across the board, not only for just Ethereum, but across the board for crypto and also equities as well. Bitcoin is now up 0% this year. It's flat, and I actually think it's even negative. Here we have Jim Cramer on CNBC. I believe this was yesterday, saying that he is now bearish on Bitcoin. Let's give this a quick listen to Jim Cramer here.
Bitcoin is like at 81, and you're looking at what I regard as being the single worst moment in this decline was the moment between 3:30 and 4:30, and then Williams comes on, and then suddenly everything's fine. I don't think so.
You don't think everything's fine?
No, there's a lot of people want to get out. Let them get out. This is not what suddenly they wave magic wand. We obviously have real issues. We have issues with the building out the data center unlimited. We have issues with a lot of people, the strategies.
And you can see, as Jim Cramer's talking here, with the price of Bitcoin at 83,000, obviously a massive drawdown from where this peaked at 124,000, I believe it was. Here, I saw this post. I had to bookmark it. In 10 years, we've never seen such a massive disconnect between the fundamentals of Ethereum and the price action. The whole world is going to run on Ethereum, and you're still selling it for the same price as sugary water maker Coca-Cola. You can see the market cap here of Ethereum is equivalent to the market cap of Coca-Cola, which is absolutely crazy if you ask me. Ethereum's entire market cap is now basically a one-to-one with its own ecosystem total value lock. This is something you only see at the bottoms. Wall Street has not even started deploying real size yet. The real world asset tokenization, the stable coins, the institutional flows are all about to hit the chain that actually settles everything. Leo here says this is a once in a lifetime asymmetric entry. Now, if you think that tokenization is going to be the future, if you think stablecoins are going to be the future, and you see this thing trading for the same price as Coca-Cola is trading, obviously you would be in agreement here with Leo's assessment. We see the sentiment here is worse than the FTX collapse. So when FTX collapsed, we saw Bitcoin price plummeting and extreme fear was hit on the sentiment at 12. Now you can see the extreme fear is even worse than the FTX collapse as a result of this liquidation. I want to pull up this post by Tom Lee on November 20th. Mike Alfred here says they're pulling out all the stops to try to manipulate Bitcoin lower using perps and futures and other derivatives. They're working overtime to try to scare people out of their corn. Don't fall for it. They are running one of the biggest scams I've ever seen in the markets, period. And Tom Lee said, agree. We can also see our favorite mascot here, who we've been covering for the past few weeks, the OG insider with a 100% win rate. just got fully liquidated for 220 million. He was up $100 million just a few days ago, but never took profit and lost everything in 10 minutes. And if that is in fact Baron Trump, then we salute you. Welcome to the crypto world where you can get liquidated really, really quickly. Now, let's talk about some technical analysis, and then we can go into a whole bunch of news. I want to end this video with BMNR specifically, but there's a lot we got to get through before we get there. ETH just repeated the same liquidity event that marked the last two major bottoms almost to the week. You can see the liquidity reset here and the bottoming pattern out. And this is exactly what we've seen with this ETH liquidity index here marked in blue. Every major ETH reversal started with a full liquidity reset. As that liquidity came back, the next expansion leg opened and we're in the same reset again. So we're in this bottoming pattern. Now we stay in this bottoming pattern for a while, but as you can see, the Ethereum price is overlaid here in the background. And so you can see generally what happens during these patterns. It marks a bottoming out, which is obviously great because we don't want to keep bleeding, because obviously as ETH falls, BMNR is going to fall as well. The ETH USD market thermometer on a weekly time frame, visualizing the sentiment in the boom and bust cycle since 2022. Here you have every buy signal since 2022 has given a move of at least 80% up, and it's now signaling a buy as well. This post says, if we assume that ETH has bottomed out, the key level to reclaim on the daily is going to be 32.53. It has to be this week. If so, we're on course for a massive surge. Let's assume we have more room on the downside. 27.85 is the line in the sand bulls would need to defend. If not, a massive dump to 2,000 levels will happen. I personally like the levels we reached for ETH, and while I think most people have given up, the market has a funny way of saying gotcha. I've longed some of these dips myself with invalidation for the setup, and this was of course last weekend that this post went down, and this user posted this week saying that they also went long, banking on the fact that this is the bottom and we're going to see a reversal. This post here in Korean, but you can see the commentary here says that we are having a bottom in Bitcoin. NUP just hit 0.47, the exact level that triggered 3 violent reversals in the past. This is where fear has peaked and Bitcoin begins its next move upward. So this pattern has held true several times in the past and has marked a bottom. And here in the technical section of the video, we're just marking patterns. The Ethereum legacy trend line is being retested once more. And of course, you have this inverse head and shoulder here is what it looks like, which says that Ethereum can go even higher once it reverses. Here you have it breaking out below the 50 weekly moving average and now eyeing the 200 weekly moving average at 2,400. This is a logarithmic chart, I believe. 2,400 offers huge support, and the bulls need to protect this zone if we want to go higher. Here you have the Ethereum macro update. Ethereum has spent 4 years forming a massive ascending triangle, and this is a multi-year view broken out in 6-month candles. This structure is not bearish. It's a textbook bullish continuation pattern on one of the highest time frames. The measured move is 6.4K to 7K ETH. Of course, that is crazy if that does happen because of the time frame being so large, but we'll see what happens, of course. Flipping over to Bitcoin here, Bitcoin hasn't been this far under its 200-day SMA since the FTX collapse in 2022. And as we mentioned, the sentiment is even worse than the FTX collapse in 2022. Here you have the RSI flashing oversold signals for Bitcoin. And of course, I want to end off the technical patterns with this post from Stock Trader Max. Of course, we've seen this before in previous videos, the BMNR guide map. So this is the Ethereum levels here, and this is the BMNR stock price. Of course, as Ethereum goes up, let's say it goes up to 4,000 or 5,000 or 6,000, as some of these technical patterns have indicated, then BMNR, being an Ethereum digital asset treasury company, is going to go right up with it. Okay, let's move away from the technical patterns now into some more interesting pieces on Ethereum. BlackRock is planning to file a staked Ethereum ETF as per the Delaware name registration, filing coming soon. So this came out, incorporation date is 11/19/2025. And I saw this post here from Kira saying BlackRock is going all in on Ethereum and not even caring about alts. So BlackRock will have not one, but 2 Ethereum ETFs. The new one is solely focused on staking, and this is very, very important. I think they will stake 99% of the fund here, and investors will have to wait until staking queue exit to get their funds, but will get a higher real yield. They've also amended their old Ethereum ETF to add staking, but only minority of the funds will be staked there, I think, Kira says. Remember, BlackRock said that staking is the #1 benefit of the Ethereum ETF, which will have huge inflow, and that was missing. Not anymore. This is going to lead to passive income. Treasuries, bonds are $1 trillion market cap. Why won't Ethereum be the same? This is absolutely bullish, right? Because we know BlackRock is a massive, massive asset manager with trillions under management, and now they're going into staking. And staking, of course, has hit an all-time high. We can see the staked Ethereum here is obviously going higher and higher as more and more institutions start staking, as digital asset treasuries start staking, and as more adoption is happening on the Ethereum ecosystem. I saw this post here by Camilla saying, resurfacing this as Ethereum ETFs like BlackRock file for staking. ETFs and DATs are the two public market options for institutional investors. This is how they're very different products. And this is referring to an older post saying, how are Ethereum DATs different from ETFs? Their structures, objectives, and activities are fundamentally different. DATs behave like growth companies focused on compounding and ETH per share. We've seen Tom Lee talk about this quite heavily. ETFs offer regulated price exposure. The goal is different here. The structure is limited to on-chain behavior. Their structures dictate off-chain behavior. For capital formation, this is a very different product. Digital asset treasuries can issue equity convertibles and deploy proceeds on-chain. While ETFs issue units to meet demand, they can't direct strategy and are bound by fund structure and custodial limits. Okay, so let's step back here. Why is this important? Because BlackRock has massive amount of asset under management. If they start buying up Ethereum on the cheap and they start staking all of that Ethereum, then you're going to see a massive lockup of all of that Ethereum, which is obviously good for BMNR, but it's also good for everybody that's holding Ethereum, because as more and more of that total supply gets locked up in staking, the yield is going to be lower, which is not great. But at the same time, the value of Ethereum is going to go up because there's less supply going around. And so if BlackRock is starting to play this game for yield, then I think it's going to be very significant. Let's move on now to the ecosystem benefits of Ethereum. I saw a few posts here. I actually retweeted this. Sam Altcoin said Cloudflare X and even ChatGPT all went dark today. This was on November 18th. Ethereum stayed online like nothing happened. Ethereum has 10 plus years with zero downtime. This is the reason why Wall Street is choosing them as their base layer for tokenization. So this infrastructure that stays online, that doesn't have any downtime, is really big. And every single time Cloudflare goes down, it highlights more and more the benefits of Ethereum. And Cloudflare, I think, went down several times this week, not just this once. Vitalik argues quantum computers could break Ethereum and Bitcoin by 2028. He warned that quantum computing could break the elliptic cryptography securing Ethereum and Bitcoin within 4 years. A lot of people pointed to this, saying that there was a lot of FUD because if Ethereum breaks and if Bitcoin breaks, then obviously they're going to go to zero, they're worthless. But if quantum computing can break Bitcoin and Ethereum, it can break all of the traditional banking system. Like that level of encryption that we have in the cryptocurrency space is much more aggressive than, like, if you're talking about quantum breaking that level of encryption, first of all, that's a risk to all crypto. Second of all, it's a risk to all global financial products because quantum can essentially break everything, right? So I don't think this is a real bear case, and I don't think really it's isolated to Ethereum in general. Here you have a post here by Joseph Young saying, insanely bullish for Ethereum scaling roadmap. Just in, ZK's Airbender team demonstrates two 5090 GPUs can generate proof of everything for Ethereum L1 block. Can generate a proof for every Ethereum L1 block. It means that block gas limits can increase safety, L2s get cheaper, blob usage goes up, ETH burn intensifies, settlement approaches real time. ZK proving becomes customer grade hardware. I break it down further. I'm not going to dive too deep into this post because it gets very technical, and I think that's just going to turn a lot of people off. I also saw this post by Jared Watts here, the ETH interoperability layer, which is launching in 2026. It's built to make all L2s feel like a single chain without requiring trusted middlemen. Users sign in once, and liquidity providers with deposits on multiple L2s let your account execute cross-chain seamlessly. I also saw this post, CeeLo cutting security costs by 99.8%, running an Ethereum L2 instead of an L1 reduced security costs dramatically. I'm not sure what CeeLo is. I haven't heard of it before, but I'm assuming it's just an app built on an L2. They quickly tapped into Ethereum's network effect to rank third in active wallet addresses, sixth in total stablecoin supply, fifth in transaction count, and eighth in on-chain profit. Ethereum is the best place for Wall Street to conduct business. This is another post here on the ZK Sync saying we're probably going to get Ethereum L1 composability with ZK Sync Ethereum L2s in early 2026. This is what Joseph was talking about in that previous post that I just talked about a minute ago. Each L2 on the ZK Sync Elastic Chain Network will have 15,000 transactions per second, infinite scalability for Ethereum because ZK Syncs can spin up hundreds of L2 chains, meaning that it's going to scale really well and get really, really fast. And of course, finally, on the ecosystem side of things, I posted this. We have the Fusaka upgrade, which is going to go live on December 3rd. I said this is a super interesting chart because the last time we had a major upgrade was on May 7th, and we saw the price of Ethereum pop right after that event, after a prolonged drawdown. So if we see a similar event happening, then you could see Fusaka go live on December 3rd in under 2 weeks, and you could see the stock popping as a result. Okay, let's now move on to accumulation. We see large wallets here picking up the dip on Ethereum in the past 2 days. 314 million worth of ETH has been bought up in the past 2 days. And this is just a continuation. Treasury companies and whales are buying the dip. And of course, among those treasury companies is BitMine, which bought Ethereum consistently throughout this week. Exchange reserves just lost 700,000 Ethereum in 30 days. They continue going lower and lower. This is the type of supply shock that never looks bullish until the chart catches up. Ethereum is being accumulated aggressively. And by the way, the same thing is happening with Bitcoin. You see the Bitcoin exchange reserve supply plummeting as well. The supply shock is happening on both Ethereum and Bitcoin. ARK Invest continues buying up BitMine shares. They just picked up 260,000 shares this week, buying the dip under $30 per share. We saw Sam Altcoin here saying BitMine trades higher volume and holds up stronger than MicroStrategy even on red days. Is Ethereum exposure becoming the higher conviction treasury play over Bitcoin? Because you can see the volume that BitMine is doing relative to the volume that MicroStrategy is doing, even though one is many multiples higher than the other in terms of market cap. We also saw this earlier this week. Abu Dhabi Fund tripled their Bitcoin bet. Let's take a listen.
So you can see that they've more than tripled their position right in the weeks and months up to the sell-off. So, it hit a record high in October, and we can see that they've tripled their position during the third quarter. They disclosed a position at the end of September that was worth around $520 million. And we can see that this is really going to be a part of their portfolio going forward. They're saying that they want to diversify it, and they really see it as the digital equivalent of gold.
Abu Dhabi is buying $521 million worth of Bitcoin, probably just as a hedge or probably just a side bet for them, quite frankly, with the amount of assets that they play around with. They see it as a digital equivalent of gold. That's obviously very bullish because more crypto adoption equals more exposure, and more exposure equals more adoption. It's a virtuous cycle that happens. Here you saw a report from ETH Digital Oil, which basically predicts a $706,000 price target for Ethereum over the long term. This is probably a multi-decade price target. But of course, right now it's trading for the same market cap as Coke. So there's a big discrepancy. Now let's talk a little bit about adoption. Here's the transaction counts on Ethereum. And you can see despite the drawdown in Ethereum's price, the transaction count is higher than ever. It continues higher and higher every single week. Over 35 million daily transactions. Real adoption is not priced in. Rumble integrating with Bitcoin and crypto wallets into its streaming platform, whereby users on Rumble can now send tips in Bitcoin. I saw this post from Coinbase offering Ethereum-backed loans whereby you can borrow your USDC against your Ethereum, unlocking liquidity without even selling your Ethereum. And so this is really interesting, right? Because if Coinbase is offering this, then I can buy a whole bunch of Ethereum, I can stake it, getting a passive yield, and then I can borrow against that Ethereum as collateral to be able to unlock liquidity and cash flow and go about my day while my Ethereum passively generates more yield for me. And by doing so, I'm also taking all of that Ethereum off of the exchanges and locking that up. So this is really interesting because if ETH-backed loans get wider adoption, not only from Coinbase, but even from somebody like SoFi, for example, you don't need to sell your Ethereum. You can just stake it, forget about it, and lend against it and pay that loan back when you're done. Coinbase is going to allow borrowers to use ETH holdings as collateral to borrow up to $1 million, accessing liquidity without selling assets. The first product launched earlier this year has seen $1.2 billion borrowed and $1.5 billion in collateralized Bitcoin deposits in that time. And this was for Bitcoin, and now they're doing it for Ethereum. Around 15,000 borrowers have used the service so far. ETH marks the first of multiple planned collateral options Coinbase intends to add over time, with staked ETH being available soon. So this is going to be really, really interesting to see what the adoption is like and what that's going to mean for the ecosystem in general. Here we have Kira again saying the Ethereum ecosystem becomes #1 in the 24-hour app revenue. Out of the top 10 app revenues on chain, 5 of them are on the Ethereum ecosystem. You can see this app revenue here over the last 24 hours. This post by Kira was made just yesterday on Friday, November 21st. After Fusaka, L2 was going to burn ETH. Together, L1s and L2s are taking over the finance world. L2 coin premiums will kick in soon when the market realizes that only L2s will survive and L1s will be the settlement layer. It's bullish for L2 coins and it's bullish for Ethereum in general. So this obviously speaks to the adoption across the board. Ethereum mainnet, 40% of transactions touch stable coins. The number has never been this high before. Again, this stablecoin adoption is climbing every single week. Europe's biggest fintech is now running payments on the Ethereum infrastructure. So this is, of course, Revolut, which has already processed over $700 million using Ethereum scaling technology, proving stablecoins are replacing Swift faster than anyone ever expected. Here we have another video that we're going to play right now from Sam Altcoin saying Polygon CEO says the Poly Market UFC deal is just a start, pointing to rising stablecoin volume and even hinting a major fintech was just days away from launching. It's probably Revolut. He says the token should be on ETH since Bitcoin and ETH are decentralized enough for a global settlement. Let's give this a listen.
This is USDC monthly transfer volume on Robinhood. And if you can see Polygon actually doing very well over here.
Absolutely right. Like you go and check the Stripe statistics also. Like Stripe, the largest amount of volumes happen on Polygon only for Stripe, right? And you're going to again, I'm not saying, but this probably coming Thursday, like I think 17th, you are going to see one of the biggest and the largest fintechs in the world also kind of announcing their move on Polygon. Okay. And these things are happening because all you are like now finally able to see this because these things are compounding now for us.
Other big news, of course, is Poly Market announced a big press release here with TKO. That's basically UFC. Obviously, Poly Market most likely going to launch a token here pretty soon. My question, Sandeep, to you: do you think they'll launch it on Polygon or Solana?
I think that the coin they should actually launch on Ethereum itself, like all the companies that have been the standard generally, that the base coin should be launched on Ethereum, and that can be like airdrop to their users on Polygon or wherever they are using. But I am a big believer of like the base value should stay on the maximum decentralized settlement layer, and I consider that Ethereum and Bitcoin are the only two chains which can claim that they are the two settlement layers in Web3. So for a company as big as Polymarket, I would recommend them to launch on Ethereum. The token should launch on Ethereum, and for distribution and all that, they can use obviously Polygon, like which is a cheap and faster execution environment. Like I don't see the chains as L1s and L2s. I see them as execution environments and settlement environments. Okay. Ethereum is maximally decentralized with thousands and thousands of validators. That's where the value stays. And then for doing the user transactions, use an execution layer like Polygon.
That's really obviously very bullish from an adoption perspective for Ethereum as well. Thailand officially implements a 0% capital gains tax on Bitcoin and crypto. And of course, this week we had the crypto exchange Kraken filing for a US IPO. So we're going to see what happens when Kraken goes public into the markets. Let's move over now to a little bit of macro related news, and then we'll end with BMNR specific news. This is Tom Lee reacting to this post here. The December Fed rate cut odds just plunged on Kalshi. They've been going up and down. I think they're back up now. Tom Lee says, seems like the Fed and the White House are set up for a showdown, especially given the delay in the November jobs report. FOMC minutes are showing December cut debate. This is why markets are pricing in tighter monetary liquidity. But keep in mind, investors long-term prefer Fed slow cutting than fast cutting. We saw the White House to tax Americans' foreign crypto accounts. A proposed IRS rule and CARF membership would let the U.S. government track Americans' crypto abroad for taxation purposes. We've seen here the OCC confirms bank authority to hold certain crypto assets as principal for purposes of paying crypto asset network fees. This was released on November 18th. This user says, never been more bullish on Ethereum's future. Basel rules to hold stablecoins will be relaxed. Most of stablecoin activity is on Ethereum. The OCC is going to permit banks to hold crypto for gas fees. This means holding ETH on the balance sheet and then staking and then using DeFi. Easing of crypto rules is coming in general. This is the SEC chair, Paul Atkins, which just said it. Congressman Warren Davidson introduces Bitcoin for America bill to codify the strategic Bitcoin reserve executive order to eliminate capital gains tax while paying with Bitcoin. And of course, The SEC has removed crypto from its 2026 priorities, signaling that it is no longer considered a special risk area. So as you see more clarity and transparency here, you're also going to see more adoption. US Senate is likely to vote on the Clarity Act crypto bill on the week of November 24th, or earlier in the session starting today, November 18th. The House of Representatives passed the bill back in July 5th, 2025. And here earlier this week, you had Brian Armstrong saying regulatory clarity is coming to crypto. Coinbase's CEO says the crypto market structure bill is nearly done, with only about 10% left before it clears committee by Thanksgiving. And if this is passed, this could end regulation by enforcement and replace it with real workable rules for crypto. And here's some of the benefits, including transparency, proper market oversight, and compliance overall. Let's give a listen very quickly to Brian Armstrong here.
Yeah, well, we had great meetings with the Democrats in the Senate and on the Republican side today. And the good news is that there's strong bipartisan support and will to get this market structure legislation done. It's important for America, and the 50 million Americans who've used crypto want to see it get done. And so one date we heard floated was, let's try to get this markup done before Thanksgiving. I think that there's 90% of the issues are already aligned on and agreed, and there's draft text going back and forth, a lot of great cross-functional collaboration happening. That last 10% are the remaining issues, and everyone committed to get in the room together and work it out, and hopefully we'll see some draft text or get it out of committee by Thanksgiving.
So 90% of the way there, Brian Armstrong says. Here, Leo posted saying the macro setup that nobody is talking about is Fed ending quantitative tightening, $40 billion less selling pressure, $150 billion of liquidity flooding back into markets. December rate cuts jumped to 75% after some Fed dovish commentary. Ethereum's market cap is equal to the ecosystem total value locked. Of course, this was something that I showed off a few minutes ago. Wall Street is finally cleared to tokenize. Of course, this refers to the regulation that Brian Armstrong was talking about. So it seems all good to go from an Ethereum ecosystem perspective, from an adoption point of view, and from a macro regulatory compliance point of view. Let's now jump into BitMine, who had some massive news this week. BitMine reported earnings on Friday before the bell. I said here, they're going to provide an update on staking, having either begun or provide a timeline. My questions were, when will staking start and what will they do with the proceeds? Are they going to reinvest it back into Ethereum, or are they going to pay it out as a dividend to shareholders? We know that BitMine has been accumulating more and more Ethereum. And in fact, let's take a look at BMNR rocks here. So you can see the Ethereum price is 2,700. We can see the MNAV is actually below 1, according to BMNR rocks. The market cap has collapsed for BitMine, and it's at par right now with the value of their underlying assets. We can see that they currently have 3.5 million ETH, over 50% of the way to their goal, and about 3% of the total Ethereum value, sitting on a $5 billion unrealized profit. So if you thought you had a bad week, I guarantee you Tom Lee probably had a worse week than you did, with $5 billion of unrealized profit. They have about 600 million in total USD cash on hand. The total value of ETH is about 9.8 billion that they have. And look at this. Their holdings continue to rise, although the pace has somewhat declined. And we're going to talk about that in just a second, because BitMine reported their earnings. Let's take a look now at the earnings that they reported on Friday. We're going to go through this deck very quickly. So they have a shareholder meeting coming up in January in Las Vegas. And here they talked about some financial results, $13 in diluted EPS, net income of $328 million as of August 31st. This is their balance sheet, which we can see they have a bunch of cash on hand, cash and cash equivalents, 500 million. And more importantly, they announced a staking update, just as I predicted. BitMine selected 3 top staking providers for a focused pilot to test capabilities as we advance and scale our own best-in-class Made in America validator network, short form Maven. Over the last few months, BitMine evaluated leading staking providers and launched a pilot program with 3 finalists to assess their performance. As we prepare to scale our own validator network, we're going to move forward with a selected group of these potential partners. BitMine will name this Maven. We expect it to go live during the calendar first quarter of 2026. So staking is confirmed. BitMine is going to have their own validator network, and that's going to go live in Q1 2026. The company assessed several native staking providers who serve institutional clients across a range of criteria: safe and secure operations, performance and reward yield generation, ability to run dedicated infrastructure, and overall service quality and support. The company selected 3 pilot partners to conduct a live test of their staking capabilities using a small portion of our ETH. So they're just testing out with 3 different potential partners. They said that although many off-the-shelf offerings exist, we believe in building the premier destination for our natively staked Ether and are proud to build with the best partners. At scale, we believe our strategy will best serve the long-term best interest of our stakeholders. So obviously, that's going to be very, very exciting for the staking to begin. They're probably going to get some better benefits than off the shelf as well. And not only that, but BitMine also declared an annual dividend. BitMine declares an annual dividend of 1 cent per share. The declaration date is November 21st. The ex-dividend date is December 5th. The record date, December 8th. And the payable date is December 29th. So before the calendar year ends, we're all going to get paid a dividend from BitMine. So great on that, guys. They highlight that 9 of the 16 largest AI Mag 7 stocks pay a dividend, and nobody in the large cap crypto stocks pays a dividend except for BitMine. They also updated their progress towards 5%, highlighting as of the 16th that they have 2.9% of the total Ethereum supply, as we just talked about. They mentioned that stablecoins have seen exponential adoption, leading to Wall Street tokenizing assets onto the blockchain. A majority of these real-world assets are on the Ethereum blockchain, making the token valuable. A competitive return of MicroStrategy versus Bitcoin over similar timeframes shows a crypto treasury stock can be an attractive alternative to owning the crypto token or an ETF outright, because an ETH treasury vehicle can unlock growth and utility that owning ETH outright does not capture. And this is interesting, right? Because we saw about BlackRock now starting their own staking ETF to generate more yield. And so this is one of the value propositions of investing in a digital asset treasury company as opposed to an ETF. They talk about an exponential growth and some of the companies that they're partnering with along the way, including Pantera, Kraken, Galaxy, and others, Founders Fund, for example. They talk about shareholder value, the leadership team, roadmap ahead. So here you can see the moonshots, you can see the 5%, and you can see Maven here, along with being a community participant in the Ethereum ecosystem. Maven is launching in Q1 2026. They took their time for a reason, spending months finding the 3 elite partners that met their criteria. This is BitMine entering staking the right way, built for institutions, backed by real infrastructure. Here, another post. BitMine shareholders are not just an ETH DAT. We're launching Maven, soon to be the most important validator network in crypto. This demonstrates how great leadership transforms and adds value to a company. Adding the Mark as a partner is another excellent example, and I'm excited to see what value unlock we can get with this partnership. This was, by the way, something that they also announced this week on November 19th. BitMine announced it's engaged Tom DeMark and DeMark Analytics as a strategic advisor to optimize its Ethereum purchases. The market team will advise on timing of ETH buys. They're a legendary systematic market timer. Not only have they carefully selected the best method of staking ETH for shareholders, Maven can become a service BMNR offers, and it will cost them almost nothing to do so. Because of the strong security protocols, this could appeal to large institutional clients and family offices where risk management is critical. This is the beauty of digital finance at play. So basically saying we can offer Maven as a service here. This leadership shows us that the company will continue to grow and innovate and create more value for not only shareholders, but the Ethereum network as a whole. It has a pristine balance sheet, which is protecting us from this drawdown. Although not so much, because BMNR is down like 45% in the past month. Here you can see another post. BMNR is going to stake its ETH in Q1 2026. Combined with staking approval in ETH ETFs, so the BlackRock ETF, for example, this means that the validator entry queue was going to be more than 2x the exit queue. End of the death spiral withdraw FUD, but staking yield will decrease drastically in 2026 and the issuance debate will heat up. So this is the double-edged sword, right? On one side, you can see staking is absolutely beneficial because you have this massive influx and the supply is going to get locked up. But as the supply gets locked up, the yield is going to be less because there's more people that are staking. This post here says, everyone is talking about the 1 cent dividend from BMNR. It's small, but they're missing the point entirely. And I really like this post. This isn't about how much they're paying today. It's about what it unlocks. BitMine is officially a dividend-paying company, the first large-cap crypto company in history to do so. It legally classifies BitMine as a dividend issuer. It opens the door for pension funds, institutional capital, and index inclusion, signals maturity and financial stability, and this doesn't drain capital that they need to continue buying ETH ahead of staking in 2026. If they paid a high dividend now, it would slow treasury growth. Instead, they're prioritizing scaling to potentially 5% of the Ethereum supply and launching Maven for their native Ethereum staking. And this part is important. The real dividends start when millions of ETH begin generating yield. It wasn't a financial move, it was just strategic declaration. We're not just another crypto company, we're becoming an institutional asset. So basically, what I want to highlight here is it already sets up the infrastructure by which they can pay out dividends, and they can always increase that dividend after they start staking. And I think that's going to be a big deal. So they're setting up all of the pieces. They're setting up Maven from a staking perspective. They partner with the mark for the strategic purchases of ETH, and they're also setting up their dividend infrastructure so that they can start paying it out immediately. This is Roy here posting the updated share count per the 10K SEC filing, saying BitMine is still trading at a premium over their MNAV, but it's a 1% premium. And I think according to BMNR Rocks, it's actually not trading at a premium anymore because it's actually below the NAV. Parity with MNAV is the most challenging state for a DAT like BitMine. Under parity is the hardest for most of their competition. So you can see the outstanding share count. This is also one thing that people were really looking forward to seeing for BitMine reporting. I also saw this post. BitMine only needs to raise $6.1 billion before they hit 5% of total ETH supply if the ETH price stays here and actually stabilizes. I think this is pretty easy to achieve. So you can see the calculation here in terms of how much money BMNR needs to raise. And of course, this is because Ethereum has fallen quite drastically. Okay, so I have a couple of posts here to summarize this video. ETH is drastically undervalued and it can explode higher through tokenization, through stablecoins, through major upgrades like Pusaka, which is coming out in a few weeks. Institutional adoption with BlackRock, especially as BlackRock starts their own staking ETF. Regulatory tailwinds like we're seeing with policymakers being 90% of the way through. And finally, I'll end with this post. Investors forget what can happen in 1 month for BMNR. On April 8th, 2025, the world comes to an end due to tariffs. Ethereum was 1,400. On the 13th of May, Ethereum was 2680, an 82% jump from Ethereum. We'll see where ETH and BMNR will be in 1 month. And the reason I wanted to end on this post by the Wolf of Dubai is because a lot can happen in a short period of time with volatile assets like Ethereum and like BitMine in general. I bought more on the back of Maven, on the back of their earnings report, and on the back of the prospects that they have, not only to pay the dividend out, but just seeing the adoption and the accumulation happening in the ecosystem, seeing what other institutions are doing. BlackRock launching a staking ETF, I think is huge. BMNR launching their staking, I think is huge. And sure, there might be a little bit more pain ahead, but I think the ROI is definitely there. From an asymmetric risk to reward perspective, I think this is a good time to start a position or even add to the position, which is what I'm doing. This is not financial advice. I'm just a guy on the internet showing you tweets of other guys on the internet. So definitely don't listen to a word I'm saying and take it for financial advice. That's not what this is. This is just a video recapping the news that I found interesting. And if you enjoyed it, please like, subscribe to the channel for more. I do these on a weekly basis. And please share this video out with other BMNR investors, share on X, share it with other people who are in the Ethereum ecosystem. I'm actually thinking of buying some underlying ETH as well, which I'm probably going to do this weekend. We'll see what happens. But as with anything, I'll update you guys on Twitter if and when that does happen. Tune in for the next week's episode of the BMNR Weekly Recap. Thank you so much for watching, and I'll see you in the next one.